June 13th, 13 market moves daily. Hey, it's got a nice ring to it today. 13 market moves on June 13th. And today could be a very exciting day, guys. Unfortunately, the RH trade that we've been expecting and the Lulu trade, it's got some limited potential. We are going to analyze those trades in details in just a bit. The main observation is this, however. The market is dominant by this move 11 behavior. However, in a much tighter trading range, I've been trying to figure out why is this and what's going on, and here's the answer. June 19th is just too close. As a matter of fact, the Federal Reserve will announce their decision on the next interest rate on June 19th. Typically, it's a two-day Federal Reserve meeting, which actually is going to start on Tuesday. So expect Tuesday, kind of a very mellow day. Typically on a day before Federal Reserve makes its decision on a rate hike or cut or unchanged, basically market is in the mode of waiting. And in the mode of waiting, you're likely to get a move 5 type scenario. And it appears to me that overall the market is already in that mode of waiting. So there is, unless certain conditions are met today, we're going to discuss those in just a sec, but unless those conditions are met, I think we're likely to continue to trade the way we have been, a few points higher, a few points lower, until we get a resolution and decision on this June 19th Federal Reserve announcement. So generally speaking, we trade directional options, guys. You know that these smaller size moves, plus 8 points in the morning, less 9 points by the end of the day, really the market is not going anywhere. If we look at the longer time frame chart, like a 5-day or 10-day chart, all it is, it's showing us that it's a multi-top formation so far. It is a head and shoulder variation formation. We're possibly continuously building out this shoulder. So June 19th could be the trigger to a significant breakout higher or lower. And until then, we got to trade with caution unless certain conditions are met. Now, important observation is in the expectation, most likely, of the Federal Reserve meeting and more dovish stock and potential rate cuts, gold is actually shown a divergence with the markets. Again, the market is up pre-market so far, and so is gold, and so is oil, because 1980s all over again, oil tanker on fire in the Gulf of Oman, which is just under Iran, and potentially, I mean, if you look back in history, I mean, this is how most of the wars has started. I mean, this is how the war in Vietnam started, you know, that there is an attack on a vessel of some kind that's portrayed by different parties in different ways. All it is just a way to start a war. Now, generally speaking, this should not be as a reason for the market to drop substantially. If we study the history of all wars, most of the time, something like that could cause just a temporary spike lower, not a significant, like a 1 or 2%, and then typically after that, the markets during the times of war, they actually move higher, 3, 5, 8, in certain instances in history, 10, 12% over the course of the following 12 months. So we're pretty much viewing this as a neutral event, but it does impact the oil prices, and it does kind of slow down the, the oil was on the verge of breaking that 50 level. We're not very far from that. And what I was mentioning in one of the videos in the last few days is once oil did break below the 50, that was going to bring some new attention from the market participants saying, hey, maybe this the demand side again, maybe this is something that's going on again. And that's what actually propelled the market. One of the reasons that the drop in the market was propelled in October, November, December last year. So that could have been one aspect that could have helped the drop, but clearly now because of this, oil tanker on fire, potential beginning of the war, we likely to see the oil prices bounce here and maybe stay higher for a course of the next few days. So in a way, this kind of actually slows down the drop in the markets. So here's what we're watching today, a retest of 28.98, and 28.98 in the last few videos we clearly stated this is the level where we are buying puts, and we're going to continue buying them all the way to the level 29.05. So we're possibly retesting these levels. Doesn't mean that we are going to get to 28.98. It doesn't mean that we may even get to 28.95. But if we do get closer to these levels right here, 28.98, 28, we're using this as an opportunity to buy puts, not buy calls. At the same time, we are noticing that the predominant behavior is move 11, move 2 type of formations, which are topping moves. So at some point, if we do hit these highs for the day and we enter in the put position, we do expect a reversal lower by about 2:15 p.m., possibly heading to a move 6 formation today. So some more detail on Lulu, our RH trade. And the story of the morning so far is Tyson Foods announces that it's got this artificial meat, type product similar to Beyond Meat. So initially, the response in Beyond Meat was rather healthy, which is surprising. And of course, Tyson Foods is not typically something we trade because it's such a low volatility name. But today, so far, pre-market, it's already up a couple of dollars. This damn thing never moved $2 in the last 10 years on any given day. So we're not super excited about the Tyson trade. But if you are executing this trade today, clearly your friend is the upside. Just don't expect Tyson Foods to go to nowhere near the extent of like BYD shares. So far, the drop in BYD shares should have been much more substantial. But I've been watching the stock on this announcement. Clearly, it's a negative for BYD, but the response has been rather positive. As a matter of fact, for about 5-10 minutes after the announcement, BYD shares were unshaken, which was unbelievable. I mean, I kept looking at the screen and I couldn't believe it. I was expecting maybe a $30, $40 drop, and nothing like that remotely was happening. No response. And later they started dropping slightly, maybe $5, $6. This could, however, be a great opportunity because if BYD shares still open rather positively, maybe $5, $6 as they are right now, in response to this Tyson Food announcement, that could actually represent a great opportunity on the short side. I mean, clearly the stock from the 140s could easily revisit the 120 level. Okay, so we're back retesting, very likely today, the top trading range of our trading tunnel. We keep seeing these repetitive moves as we identified over the course of the last few days. Now we're actually, instead of the 2 top formation moves, we're in 3 days of forming top moves, which is significant, and it could actually have an important role of how much money we could be making if certain other conditions are going to be met. Now, focus on these trading tunnel levels. We did add a level I skipped yesterday, which is this 28.98 level, so you guys know what to do. We just discussed that. If we're getting closer to this upper trading level, we are adding puts right here. Now, head and shoulder formation continues. And for those of you that studied the chart divergences course, you know that one of the best bearish patterns that could be developed is the head and shoulders. And if you know how to apply it, you can use it on different time frames, weekly, monthly charts, intraday charts, and so on. So here's your head and shoulder formation right here. And yesterday, pretty much the lack of a breakout to either direction is just what it's doing is just building out that shoulder. So our strategy remains anytime we get closer to this yellow line, which is the upper trading range of our trading tunnel, we want to short. Anytime we get closer to the lower trading range, we want to close out and collect gains. Expect some profit taking in Lulu and RH. Both companies reported great earnings. Now, so did other companies, retail companies. Specifically, we're talking about retail sector like Estee Lauder and so on, Walmart. They've all reported great numbers, and they've all actually moved higher after the earnings announcements. However, in order to put these trades together, we really need to be paying attention to what actually happened to Estee Lauder, what happened to Walmart, and so on. So they did not necessarily go negative the day after the earnings announcement. In other words, they did not surrender all the gains, but they did give up, at least in case of, for example, Estee Lauder, I mean, they gave up pretty much most of the gains, so about 70-80% of the gains on the day of the earnings announcement. And in case of Walmart, it gave up a couple of bucks, which equated to maybe 30% of the gains. So if you use this 30 to 70% of gains and apply this, I think Lulu probably represents a better trading potential as far as a reversal, because in pre-market action, this is what we've got. Actually, the aftermarket trading action combined with the pre-market trading action on Lulu, we're actually considering buying these 185, 180 puts. Now here's why. The initial response was such in Lulu, it dropped all the way to 155.22 immediately after the earnings announcement. Then it spiked. Overall, the report is great. So they started buying the stock. And look, as soon as it gets to this level, about 179, look what happens. Boom, big seller comes out and liquidates some shares. Okay, bounces healthily after that, keeps moving higher. Same level, about 179. Another seller comes in. Since then, the stock recovers, keeps moving higher all the way to 182.75. And at the point I'm recording this, just barely starting to show some signs of a reversal. Now, typically, and we're going to compare this with the action aftermarket pre-market of the RH, and this is why I think this one presents a better opportunity on the reversal side, and not just because of these sellers rapidly coming in once the stock reaches certain levels, but if we look at the context, Lulu has had substantial appreciation quarter after quarter after quarter. I mean, I remember when this thing traded at 30, 40 bucks. So it has traveled a long way. And those people that were, let's say, not getting at 30, 40, let's say they were getting in at 90, at 100, at 130. I mean, they are going to take some profits today. So we're not saying the report is bad, that's why the stock is going to drop. It's got nothing to do with that. It just simply, we're expecting some profit-taking action when the market is going to open for trading at 9:30. So far, pre-market, the volume is not here, not there. We're not seeing a crazy number of people coming in, wanting to get out, but it's up on pre-market volume so far of 20,000 shares, which, you know, for this stock, it's actually not a small amount. It's not a great amount either. So the reason we're thinking there's signs of a failed breakout, to help you understand that, let's glance at the weekly chart and the daily chart. So the weekly chart, clearly, going into this earnings announcement, we had some clear divergences between the RSI and the price action, and the stock, it keeps moving higher, but the strength of the stocks is deteriorating. A lot of times we'll notice this, despite of how good or bad the company is doing financially or sales-wise or profit-wise. This typically happens when there is a lesser number of buyers wanting to buy the stock at these levels. And clearly, if there is lack of buyers, despite of the great earnings announcement, the stock is going to have difficulty moving substantially higher. Does not mean it cannot move higher, but the key word here is substantially higher. So we're not expecting Lulu to go up 20, 30 bucks. So far, in relation to yesterday close, it's trading up 12 bucks, which in our view, many instances, this actually resembles a cup with a handle. And a lot of these situations where the context, where the stock, as you can see on this chart, from 50 bucks all the way to this morning pre-market 182, it's a substantial appreciation. And at these levels, okay, people are just skeptical whether this momentum can go on forever. And they have the right to be skeptical, because it's typically the retail stocks, because, you know, a lot of them depends heavily on how well their sales are going. If there's any slowdown in the sales, their numbers could impact greatly. And this stock is priced for perfection. And considering that the momentum has been going on for quite some time, to assume from here going forward that everything is just going to be as rosy as it has been, clearly is not the idea a lot of investors are sharing. So it's reasonable to expect, again, some profit taking happening at some point. Now, what levels are we specifically targeting? And also, clearly, despite of all the positive action and clearly the stock price wanting to go higher, we're noticing that going into the earnings announcement, we had a lot of red candles here telling us that people were already skeptical of the earnings report. Now, it proved to be a great report, as it has been. over the remainder of the quarters. But look what happened here. This earnings report was great too, right here. Look what happened after that. Clearly that coincides with a major drop in the markets. However, you know, I mean, this is a significant drop for a stock that really had no fundamental issues from 170 back to, you know, almost 100 level, you know, 110. Clear crossover, bearish crossover in the MACD as well, telling us, hold on, something is just not 100% right here on this thing. And so the way we would trade this is we're considering if the stock opens, right now it's at 181, 182 level. If it opens around 182, 185, we are looking to purchase 185, 180 strike puts. So we're targeting this level right here, guys, as the entry opportunity. When I mentioned earlier the failed breakout, basically we're seeing that the stock has struggled to go above this level, and if it opens slightly above this level, okay, the pre-existing conditions were such that around these levels there were more sellers represented by these substantial higher bars on the sell volume right here, and clearly we see some signs of accumulation distribution in such a way where we're setting some lower highs here, and that typically is a predecessor for a further drop or a sell-off short-term wise. Okay, so it's reasonable to expect our first exit would be right here at 170, 171 area. And you can easily track that down by observing the pre-market, post, after-hour trading. So each time these sell-offs have taken place right here, they got us right to this 170 level. So it's reasonable to assume that if we open at 182, that the stock could sell off back to these 170, 171 level, and we would be using that as entry. We'd be using the 182, 185 level as an entry and exiting at the 170, 171 area. Now, in some instances, these sell-offs could actually intensify. So what we would actually do, would set the second exit at 165 and the third exit at 160. So basically, if you own 3 puts and you're getting them around 180, 185 area, you want to sell one when you get to this 171. You want to sell the other one at 165 and the third one at 160. Now, clearly, some of these exits, they may not be achieved. So if you see clearly the stock just gets to this 170 level and just keeps hesitating to move lower, it goes there once, you close your one contract, it goes there twice and it fails to break that level, and it goes there the third time. If you see it is hesitant to break that level on the third time, just sell the entire position at this point. So watch this level of 170. We're expecting this reversal right here, okay, based off all the information that we just discussed. Potentially, depending also on what the market is doing at the time, this sell-off could accelerate and we could hit some other targets. So just keep this in mind, okay? Don't put no big, crazy, huge positions out there. Acquiring a few contracts is reasonable. And just keep in mind, if the stock, let's say, opens at 182, 185, and within the first few minutes, it could potentially spike to 187, right? So what do? What is your tolerance level, okay? Well, your tolerance level is if it breaks above 187.50, then just close them out. So if you're buying them between 182, 185, the stock moves to 187.50, your losses are going to be basically contained to a bare minimum at that point. So if you see it spike above 187.50, boom, get out and just view it and see if maybe there is a better entry. Sometimes they see this quick bounces right at the open. Typically, they're great entry opportunities. So I would keep buying this thing all the way to 187.5 on the put side. If it breaks above that on strong volume, I would just cut the losses and get out. Now, how does this trade compare to RH? Well, RH, in context, it's up substantially higher. It's up 26%, moved from $94 closing price all the way hitting the high of 120.84. Now, clearly, this is a very bullish flag right here if we combine the post-market session and pre-market session today. But keep this in mind. And we're not talking about penny stocks. We're talking about stocks that institutional investors like to buy. Very rarely will we see a stock move 30% plus in one day. It happens on very rare occasions. So we would rather much bet against one of these rare occasions. Considering the stock is up already 26%, could it move another 4% higher? Yes, absolutely, which is very interesting because it coincides with a very crucial level for the stock of 125, 130. We're basically willing to make a bet that this stock is going to have a very difficult time moving above 125. So that's why we're going with a strike price of 130, 125. We think it's going to bounce to 125, and after that, we are expecting some profit taking to take place. We're targeting an area of 113.35 and 115.50 for your exit points on this one. Now, here's how the chart looks. Pre-existing conditions are completely the opposite of Lulu, right? This one actually taking a serious hit last quarter. For those of you that were trading with us last quarter on this one, we did pretty good. Locked in some very healthy gains on this one. So last quarter, it dropped right off this level of 125. And this time, it's going to be going against that level and trying to break above that level. It could be a difficulty for the stock because last time it sold off on very strong volume. It's going to take a lot of volume, a ton of volume for this thing to actually break above this 125 level. Surprise, surprise, it also coincides with this death cross formation right here. So this orange line right here is basically where the shares are trading pre-market already. So these orange line, as you can see, it also, in its history in April, tried to come up against this 120 level twice, and what did it do? It failed. So far this morning, it's at 120 level. And we're not sure exactly where the stock is going to open, but if it opens anywhere higher above that 120, if it opens at 120 to 125 range, we would be interested in buying these 125, 130 puts because we think there's a low probability it's going to break above the 125 in that because of profit taking, it will reverse and will revisit some of the levels of 113, 115. So we're not targeting a huge drop. That is why I'm not crazily excited about this opportunity, but there could be a 50%, 100%, 150% gain here, depending on what exactly you're paying for your option and, you know, how crazily some of these investors are going to decide to take some profits on this one once the market is open. If we take a look at the weekly chart, clear multi-top formation, this is what happens last quarter, so helps you visualize a little bit better that this is not just an area, the area of 125 that is, that coincides with this gap down and significant sell-off last quarter. It also coincides with the blue line, the 50-day moving average, right? And if we kind of stop looking at all the details and just step back for a second, we really do have the blue line making a move lower towards the orange line. Now, once you refresh this chart, once the market is open, this may slightly change. However, going against this level, if the stock does reverse, it's actually going to make the blue line continue making what we refer in all of our videos as the hook. The hook meaning at some point the blue line will cross the orange line, creating a death cross formation. So we're kind of looks and appears like we're miles away from that, but there is a probability we could be getting a black reversal candle on RH and Lulu today. And if that does take place, that's going to make this hook much more visible to pretty much all of us. So pay attention to this level, 124, 125, good entry. If something crazy happens and you see huge volume coming in, if we basically break above that level, I would cut the losses at 126 and a quarter, 126.50. If we get there, I would get out. Now, just keep in mind, right now the stock trades at 120. You know, what if it opens at 118? What if it opens at 116 or something like that? Well, in that case, there's just not a huge potential for downside, right? So because we're targeting our exit one at 115.50, $115.50, and our exit two is 113.35. So if you're getting in at 123.50 and you're getting out at 115.50 or 113.35, There's some meat on the bone there, but if you're getting in at 117.50 and getting out 115.50, there's just not much there. So for that reason, this is not like an ideal perfect trade. It all depends on your entries and exits and what you're paying for the options. Okay, with that said, guys, yesterday on June 12th, we actually did have another move 11, and you probably have some questions about why an 11. So technically, it was a 2. Market pops right at the open and then starts selling off. Looks very much like, Tuesday action, and we decided to record this as a move 11 because in the move 2 you would have much rather pronounced move lower. So for the magnitude of the move, it was not quite as great. And if we combine just a little bit of the market action, this is what really makes this a move 11. Market action, if we maybe go 6, 7 in the morning, combine a little bit of this data, this really makes a complete pyramid. So from 6, 7 a.m. going into the close, this is what we get. There's your top of the pyramid at 28.89, 28.90 level. And we basically start here, we finish right here. And, basically this is your pyramid. To help you visualize this a little bit better, the difference of the moves between 2 and 11, I think this picture right here, the 2-day sequence, is going to help you get a little better understanding. So this is a move 2 from Tuesday, right? You see, so in a move 2, you're going to have a larger gap up higher in the morning, and this larger gap up higher is going to result in more pronounced moves lower intraday. Finished out by an 11, and you can see these 11 right here. The difference is the magnitude of the move, right? So 2 is going to be much more of a bearish sort of move. So 2.11 is what we were recorded the sequence as. Now, if we take a look overall at what's happening, we're continuing to get these topping moves. Here's your 11 top, here's your 2 top, here's another miniature 11 from the prior day, right? And overall, that takes us to a very, very bearish sequence, guys. 5, 1, 11, 2, 11. Things are getting a little bit interesting here. Actually, they're getting very much interesting because overall, after yesterday, we're creating these head and shoulder formation. And yesterday, we were able to get an extension of the shoulder. So sometimes the longer the shoulder will be built out, the more drastic of a drop we could be heading into. Just keep that in mind. So this is a very bearish sequence, 11 to 11, but there's one missing ingredient, guys. I told you at some point in the video I was going to give you the secret sauce. So the secret sauce is as bearish as everything is as far as the 13 markets move formula sequence. We don't want to prematurely go out there and put these huge positions until VIX makes a move. And so early in the video, we have pointed out that we're noticing the divergence in the gold. Well, the divergence in the gold, markets up, gold up, could be partially not because everybody's scared of the major drop coming, but it could be because everybody's expecting the dovish Fed in just a few days. So that divergency is explained. However, in order for us to make substantial profits, we really need VIX to get some traction. So the confirmation of the day that we're looking for, we're still waiting for VIX to make a move above the critical levels. And so if this condition is met, then we definitely want to load up and we want to substantially increase our positions on the put side. Unless that takes place, we're expecting the market to just continue in this sideways fashion until the 19th, when we're finally going to hear from the Fed. So repetition of topping moves in the last 72 hours, guys. Just wanted to remind you, a quick refresher. We get another one of those yesterday, and we've talked about the bigger topping move as in a head and shoulder. There's another way to look at this as in multi-top formation variation, which we could be heading into the next 48 hours if we don't get a break lower and a breakout on the VIX. So here's the deal. The next market move that we're expecting today would be a 6 where the market could trend sideways to slightly higher throughout the day, and we will get a sell-off that could begin around 215 and finish basically raising all the gains for the day or finish slightly negative. We're considering a variation of an 11 where we're going to pop intraday, possibly between 10, 11, and 12, and then the sell-off is going to resume. If it coincides with our key levels of 28.98, 2900, 2905, that pop, the pyramid move of the 11 would be a great entry. And we're not discounting the fact that the market overall could make a pullback at the open and work its way a little bit higher, another pullback, work its way a little bit sideways. So a variation basically of a move 7. We're not discounting the probability of that. So with that said, okay, VIX is playing around this 16 level, and buying puts slightly out of the money is justified. However, your higher probability trades will derive from buying puts in the money or near the money. Here's what we really need to happen. Here's the condition that we need to take place today in order to build bigger put positions. To profit from the sequence, this 11 to 11 sequence, we really need another topping move as described today, ideally out of the 3 projections for the day. We'll go back to that slide real quick. If we see another topping move, another 6, or another 11, or another 2, which I didn't put here because I think the probability of a 6 and 11 is greater, but you know, a 2 could still happen. So if we get another topping move, 11, 6, or a 2, that would be condition 1. We'll get condition 2, break out above 16.53 or 16.75 ideally. As you can see, all these orange dots, 1, 2, 3, 4, all these are levels around 16.4, 16.5. So we want to break above that to make this sequence extremely effective for us. Now, this level 16.7 was achieved right here. And so 16.5, 16.7, we want to break above that. And once we see a strong break on the VIX above this level, especially if we close above 17, above 17.5, above 18, that gives us a confirmation that a big sell-off is about to begin, and we can easily end up at 28.26, 27.75 area in no time. So keep an eye on the VIX, all eyes on the VIX today, guys. And clearly, for some of you that trade in smaller accounts, if you see this VIX breaks, because buying call options on the VIX is probably one of the least expensive options you can buy out there. So buy them near the money. My best results trading the VIX, we're not buying VIX in the money, but just a couple of points away. So if you see the break coming above 16.75 on the VIX, and we're getting another topping move, then a simple strategy for someone trading with a smaller account would be just simply buy 17, 17.5, 18 level strike calls on the VIX in the expectation of a bigger drop. Now, again, if we're not getting a breakout on the VIX, there's no point, there's definitely, you don't want to be buying calls until we get a break above. Because again, your options could decay rather rapidly if we don't get a move before June 19th. Key takeaways. Short the bounces, especially at the higher trading range of the tunnel. 2, trade smaller positions until June 19th unless you know what happens to the VIX. Intraday bounces are shorting opportunities. Load up on puts if VIX breaks above 16.53, 16.75. Guys, I wish everybody has an awesome trading day today. I will see you on the next trade tomorrow.